Hi guys, in today's episode I am going to be going over some very important yet simple terms that you will need to understand in order to be successful within the crypto markets. Trust me, if you do not understand what these simple terms are, you're not going to get very far. So it's important that you watch this lesson a few times, I should say this episode, a few times to get a grasp of what I'm trying to say. Because in all the upcoming episodes, if you don't understand what I'm saying, obviously you won't be able to get as much information out of it as you possibly could. So let's start with the first term here. The first term that I am going to be going over is trending. Now, what do I mean by trending? Trending basically just means that the market is moving in a certain direction. If I draw what is known as a trend line, for example, from this initial high all the way up to where the market is currently, and let's even say this first low here to where the market is currently, we can see that the market is moving in a downwards projection. Its trajectory is in a downwards manner. That just means that the market is trending in a downwards manner, guys. All right, so that's all I'm saying. And of course, there's vice versa. We can see here, the market is quite clearly moving upwards. So when I'm talking about the market is trending, all I am referring to is whether or not the market is moving up or down. Now, to give you a better example of this and the trend lines, what I'm going to be going over now is what is known as support and resistance, because this is very important for these trend lines. The resistance and the support are extremely important in knowing when a trend is about to, end, or it's about to change into something else. For example, what we can see here on this bottom trend line that's hitting all the lows, well, the majority of lows here, and this trend line that's hitting the majority of all the highs, is that they find support and resistance. Obviously, support is going to be the bottom trend line. Think of it as a trampoline. Every time it hits here, it finds support, and then it continues to bounce up. Look what happens when it breaks through support. When it breaks through this line here. If we continued it on, right? It breaks through support and then it continues to go down. And every time, vice versa, it comes up to this line, it finds resistance. It hits it and it goes down. It hits it, it goes down. It hits it and it goes down. And so on and so forth. And if I find a very good example down here, let's look at a trend line on a downwards market. It is the exact same thing. So every time it hits the bottom, let me just move that slightly. Every time it hits the bottom, it comes down, hits up, goes up. Obviously, this one breaks through suddenly, but it comes back up, it hits the bottom, finds that support, and then continues to go on. And then it breaks through the resistance. And we can see every time it comes up near this trend line here, it falls back down. So those are your two examples. Your resistance is always going to be on top, which pushes the market downwards, and your support is always going to be on the bottom. It pushes the market upwards. So within a trend, you will always have support, and you will always have resistance. Resistance being on top, support being on bottom. Now, the two other things that you really need to know in terms of trending and your support and resistance lines is firstly the term bullishness. If I speak of bullishness, I mean that the market is trending in an upwards manner. The market is quite clearly in this trend going in an upwards manner. That is what bullishness is referred to. If the market is bullishness, or it's going through a bull cycle, it just means that the market is moving upwards. However, of course, we have the other example over here of this trend. What we can see here is an example of bearishness. That just means that the market is moving in a downwards manner. So again, if I zoom out here, bullishness means it's going up, bearishness means it's going down. Within trends, of course. The market is trending in a bearish direction, the market is trending in a bullish direction. And there is a third and final, trend, and this is what is known as areas of either accumulation or consolidation. As we can see here, the market is not trending in either direction. Quite clearly, it's moving in a horizontal fashion. So when the market is moving horizontally, it's basically trending, and it's called an area of either consolidation or accumulation. That is what we're looking at right here. Consolidation or accumulation. Apologies, I think I just misspelt that. No, it seems to be correct. Consolidation or accumulation. That just means that the market is moving horizontally. So whenever I say, hey, that's an area of consolidation or accumulation, it just means that the market is moving in a horizontal fashion here. And the final term that I will be going over is an order. What do I mean by an order? I basically just mean whether we're buying or selling in the market. We're buying, going long, or we're selling, which is going short. We're shorting the market. If you've ever heard those terms, that's just what they mean. So if I say there is an area of a lot of orders, it just basically refers to a really big push either to the downside or the upside. Because to make a really big push in either direction, you obviously needed a lot of orders. Therefore, you have a lot of sell orders to push the market in this downwards direction. And you need a lot of buy orders to push the market in an upwards direction. So if I say that's an area with a lot of orders, I am just simply referring to an area that is pushing the market in a direction very strongly. So that's all we're going over. Just to give a recap, we've talked about trending, support and resistance, bullishness, bearishness, accumulation, consolidation, and of course, areas of lot of orders. Now, please guys, go over this episode a few times because you will need to get your head around these terms, because in all the upcoming episodes, I am going to assume that you know all of them. So therefore, I will not be going over the definitions again. And when we're going to be talking later on about, strategies where you can actually enter the market, strategies that you can start potentially making money off, etc., you really need to understand what I'm saying. Otherwise, you're not going to be able to get that strategy. So it's 100% important that maybe you watch this a few times, take some notes down, and then you will be able to profit later down the line in more episodes. Anyway, guys, I hope you have really enjoyed this. You have found it informative. Again, watch it a few times, write your notes down, and get ready for the next lesson. The next episode, I should say, because it's going to teach you a lot of good stuff. Anyway, guys, that is it from me today. You stay safe, and I will see you in the next episode. Bye.